Yo, what's up, guys? Robbie here with a quick recap of the day and some setups you might have taken on the market today. Not much on the calendar today except for the 10-year bond at 1 p.m. and FOMC minutes at 2 p.m. The bond auction, certainly something you don't necessarily want to be trading into as that time approaches, but sometimes the FOMC minutes have been a little bit of a nothing burger, as we've already seen the market react on the actual FOMC day prior. Now, starting off with the VIX, we are putting in a high of nearly 58 as we see here in a double top, triple top setup, showing some exhaustion from the short side. And on NQ, looking here in pre-market, in my opinion, we're setting up a very bullish scenario. So we have a higher high here during the London session and a higher low just before the open. Around 8 p.m., we have this morning star setup, as well as a 30-minute very strong engulfing candle closing with strength over VWAP. So of course we have 10-minute EMAs crossing, and one of my strategies as of recently is a momentum trade. So starting off with yesterday's price action, actually, we will see here on the 30-minute chart, we had just a single green candle pretty much on every leg before continuation. So with that in mind, you want to see a very strong trade trend in one direction, seeing where the first opposing candle is, or first opposing color candle, and then trying to take an entry as close to the top or bottom of that candle to trade the continuation. So you can see what 1, 2, 3 times here, and then we are pretty much flipping directions here. So getting on to actually the morning, we have this first candle here just before, again, above VWAP, EMA is crossed, we're pushing up. And here I am considering that at the very least, we're going to be looking at the pre-market high, so the London session potentially. But of course, we could go higher, right? We don't never know where the market's going to take us. And I was especially looking towards this area around 1670s, 700 area, 17,670s to 700 area, which would have been what I call the golden zone on the Fibonacci retracements, the 61.8 level. And so we see we're pushing up over the pre-market high, but we're starting to see some exhaustion here on the smaller time frames, and we're getting some whiplashing, right? And so we're starting just to get really chopped up to the day. It's putting in lower low, well, higher low, lower low, depending on the micro time frame that you're looking at, but very a flag-like pattern that we got going on here, right? So looking at multiple time frames, we can see that we're putting in a lower low here, just shy of hitting VWAP, but testing right here the opening range low. So pretty much the opening print, basically, which is a pretty strong signal that we'd be pushing off of VWAP and holding the opening print, correct? So we're pushing up, but we're putting in consistent lower highs, right? So, we're not sure what's going to happen here. We could break down, we could break up, right? But as soon as we put in these higher lows, and we break out over this lower trend line, it's about go time, right? But if you're not a breakout trader, you could have had another opportunity to take a retest later. And we have a very clean opportunity to do that here around the 825 pivot here on this 5-minute chart. Using a similar sentiment, if you want to take that first opposing color candle, you could have had very minimal risk with these EMAs, and depending on your entry, anywhere from 50 to 70 plus points on NQ, which is very respectable by most people's standards. And as you can see, we're pushing on, just sort of chopping and consolidating. But in my mind, we have time equals intent. And in my opinion, this intent was to push out and break over the opening range. So as we're approaching the 1 p.m. bond news, you can see we're just getting ready to break out. And those of you who might know my trading style, when we're defining the opening range, so which is the first 30 minutes, the high and low, the first 30 minutes of the day, if the opening range is set with wicks, then I like to draw a supply zone based on some of those wicks and where the bodies are. So 1 p.m. bond news hits, it's looking really great, very, very bullish. And, wouldn't you know, the high of this was really this pivot from yesterday around 1 o'clock, 1:30 to, 2:30, right? So excellent confluence if you were interested in taking a short. But I should say, it's not bearish until it is, right? So we wanted to wait for some confirmation to see that actually is a bearish setup. So in this situation, we should still be continuing to respect the bullish perspective. Now, going back to my 5-minute supply zone in the opening range strategy, we have this pullback. So first of all, we don't have a candle flip on the 5-minute. So that's very good. We're closing just shy of the opening range. And then we get this near perfect test in this midline of this zone with small EMAs. Here we got the 2-minute 20 and the 5-minute 9 EMA tap. So that was an excellent entry to potentially retest the high of this pivot here. Unfortunately, that didn't happen. And if anybody was short here, they might have gotten a very, they might have been shaking their greedy little hands, as we got this 200-point flush. But wouldn't you know it, that President Trump administration announced a 90-day pause on reciprocal tariffs with nations that wanted to make a deal. So any shorts that hadn't covered were probably shaking their greedy little hands, only to find themselves in need of a very serious diaper change as the market rallied nearly 1,400 points in about 15 minutes. Look at this. And we've seen some wild moves recently, but I don't think anybody expected this. But of course, with such a big news catalyst, it's very expected that we would squeeze in a very hard way. And not only was this a 1,400-point move from here to here, roughly, as we approach the end of the session, we are closing over 1,900 points. And this is probably, if I'm not mistaken, perhaps the third largest bull rally in history. We'll have to go back and check some notes on that. But really, really tremendous day for the market. So hope you like that recap, and we'll catch you on the next one. Peace.